Companies are not linear. They grow for some time and they might enter into downturn at some point in time. In equity markets, you make money out of earnings compounding. You are putting your money on a compounding machine which is growing at a much lower rate. Your stock price compounding will be similar.
Which sectors do you think, according to you, are pro-growth?
When you look at maybe a lot of consumer companies,
Model portfolio is based upon the historical figures, or is it the forecast?
is always a forecast.
There are 4 stages of any company's life cycle. हम ये आइडेंटिफाई कैसे करेंगे कि यार ये कंपनी उस ग्रोथ फेज में है?
Typically,
Hey everyone, very good morning. I welcome you all to this podcast with Dhan. This is Zeel Doshi Thakkar, and today I have got a very interesting guest with me. We have with us Mr. Aditya Khemani from Invesco Mutual Fund, and today we are going to talk about business cycles. See, dear audience, most of us have started investing after COVID. And after COVID, we all have been slightly fortunate that we have only seen the upsides of the market. In the last few months, we can see the volatility. We can see a lot of selling from the FII side, and we can see that how the markets are falling. I'm sure आप सब रोज सुबह उठ के अपना डीमैट अकाउंट, ट्रेडिंग अकाउंट ओपन करते होंगे विद द होप कि यार आज तो मार्केट्स ग्रीन हो, बट यू नो एज ऑलवेज आज भी मार्केट्स रेड में ओपन हुए हैं. सो क्यों ना आज हम इस बिजनेस साइकिल को समझने की कोशिश करें, क्यों ना आज हम इस मार्केट के साइकिल को समझने की कोशिश करें एंड लर्न करें मिस्टर आदित्य से कि हाउ वी कैन नेविगेट फ्रॉम दिस सिचुएशन, हाउ वी कैन सेल स्मूथली फ्रॉम दीज मार्केट साइकिल्स. So, Mr. Aditya, I welcome you for this podcast.
thank you so much, Zeel.
Yeah. So, sir, what is your take on this market? What is your outlook on this market?
Look, Zeel, as you rightly said, there are a lot of investors who have entered the market last 3-4 years, and probably the last 3-4-5 months is the first time they are experiencing some loss in their portfolios. But
Right.
if you go back into history, this is part and parcel of markets. I mean, had making money in the markets been so easy, everyone would have been in the markets itself. So you have to understand that markets tend to do well over a longer time frames. But in shorter time frame, there will be volatility as always. And again, there's a reason why volatility comes and goes. So if you again go back into history, there are a lot of times, like you call this market cycle actually.
Okay.
When market does not do well for a long period of time, so you call it bad market cycle. And when they tend to do well, you call it good market cycle. So you have to understand market. I mean, everyone talks about how attractive Indian market, equity market is, and how much money, how much wealth it's made for people. But again, if you look at, maybe I think ScanX came into being 1981, so it's been 33-34 years. And I think in that time frame, there's been a 14-15% compounding, which means that one has made 14-15% annualized return if we take a longer time frame. But within that, there have been a lot of corrections. Again, if you go back into history, last 10 years, I think what I was reading is that there has been more than 10 corrections in the last 10 years. Correction is something, we define it as any fall more than 10%.
Right.
So 10 correction last 10 years, which means that one correction will happen every year on an average. So probably this is the correction last 2 months, 3 months we are seeing for this year. So from that perspective, you should not treat volatility and correction and thinking that now you will not make money in future and all that thing. This is part and parcel. So you should make sure that you become stronger in this down market so that to capture the upcycle in times to come.
राइट राइट, वेरी वेल सेट. इनफैक्ट किसी ने मुझे ये कहा था कि ज़ील अगर मार्केट्स गिरती है ना तो आप लोग को सेलिब्रेट करना चाहिए, बिकॉज ये टाइम है यू नो टू टॉप अप योर पोर्टफोलियोज और टू इन्वेस्ट मोर और टू स्टे काम. इज इट दैट वे?
Yeah, look, again, I mean, market is such, like when you go and buy some clothes, typically human behavior is whenever you see discounts, you become very happy and you tend to forget that you bought something at a higher price in the past. But opposite works out for the equity market. Over here, when you're getting something at a discount, people, rather than jumping on that opportunity, start repenting as to how much loss they made on the current portfolio actually. So I think you very rightly said you should treat it more as an opportunity rather than lose sleep about you've lost some money and all that stuff.
Very well, thank you. So Aditya, how will you explain a business cycle? So I have heard, okay, please correct me if I'm wrong. I have heard that there is something called as market cycle, there is something called as business cycle, and there is also something called as company life cycle. So what are these three terms? हम एक आम भाषा में इसे कैसे explain कर सकते हैं?
Sure. Look, again, the business cycle has a lot of meanings actually. So I will simplify it. Just like the word says, business cycle, it means business has cycles. Just, I mean, just like any other individual doesn't go through the ups and downs forever.
Right.
In case he goes through a up phase, he will also go through a downturn at some point in time. So similarly, companies are not linear. They grow for some time and they might enter into downturn at some point in time. So business cycle is nothing but the ups and downs of a business which happens over the life of the business. So that is business life cycle. Then if I correlate that with the company life cycle, what is a company life cycle? Again, just like any individual, I mean, we are born and we have different stages in life. Similarly,
Right.
company also has different stages. They are born as startups, and after
Right.
that they move into a growth
Growth
phase,
phase.
and after that they
Yes.
move into a matured phase, and then they decline. So I mean, why is this concept company life cycle important is, look, longer term, again, in equity markets you make money out of earnings compounding. So you have to
Right.
bet on companies which can grow earning at a higher rate for longer period of time. So which means you have to have younger companies in your portfolio. In case you have matured companies in your portfolio, and how do you define matured company? Like any company which has not been able to grow at the rate of maybe India's GDP growth rate for the last 10 year will be called a matured company.
Okay.
So last 10 year Indian GDP would have grown at 10-11% annualized. So
Right.
any company which has grown less than 10-11% is a matured company. So
Okay.
which means that when we are putting your money on a compounding machine which is growing at a much lower rate, so your stock price compounding will be similar. So longer term you will not make much money. But then if you put your money in a growth vehicle, in a engine which is growing at a much faster rate, then obviously earning compounding is much higher, and longer term your stock price compounding is also much higher. But mind you, the first thing you ask, volatility. These companies also go through volatile phases. If you look at I mean, great companies like Amazon and all these companies, if you again study their stock price chart last 20-30 years, you will see these companies would have also gone through a lot of correction in that journey. But has it meant they have not been able to create wealth over the longer term? The answer is no. So
Yeah,
short
they
term
have.
volatility does not mean that these companies will not be able to create wealth over the longer term. That's why you should, maybe from a behavioral psychologically point of view, you should, I mean, start thinking of volatility as your friend rather than an enemy. Then probably you will be able to, I mean, act better in the market and take better constructive calls. Because it's, at the end of the day, look, it's not your mind should make the decision. Your heart should not make the decision. Otherwise, you'll end up making wrong calls. So I think these are few facets one should remember, that cycles will exist, business cycles will exist, volatility is a part and parcel. So I mean, you become much more, treat volatility as your friend, and then maybe invest for the longer term. You don't think that, so because volatility is such, if I ask you that whether one
Right.
will make money from the in the market next 3 months, answer might
Yeah.
not be
Yeah,
I'm
we don't
unsure.
know. The short
But if
term
I
no one
extend
can
that
say.
question, if I make it longer term, if I ask
Right.
you will I make money in the market next 3 year or next 5 year, then the answer will be, I mean, much closer to a yes. So I think
Right.
volatility is something in short term. In longer term, volatility does not exist.
Okay. Okay. Thank you. So, okay, thank you for explaining about this part on business cycle and even company life cycle. So, Mr. Aditya, I have heard that Invesco is coming up with a business cycle fund. And I am also aware that there are already some 15 odd funds in this sector already. So, what is so unique which Invesco is coming up in this new fund of business cycle?
Sure. Look, as you rightly said, this is not a very new category. This category already has 15-16 funds in the market. So,
Right.
what is so different about our Invesco business cycle fund? Look, there are two ways of as I defined, business cycle is nothing but business goes through ups and down phases in their life.
Right.
So there are two ways of managing a business cycle fund. One is to say, let us buy a business or a company when it is not doing well. So when a company is not doing well, usually stock prices are cheap. You get at a lower price, and when the business rebounds and growth comes back, usually you see stock price doing better. And that point in time, you maybe exit
and book the profits.
Yeah,
and
book
move.
the profit. So that is the conventional way of managing a business cycle fund. That style is much more contra in nature. That style is much more value in nature. That style is much more mean reversion kind of a style. But what we are saying in our fund, we will, as I said, businesses go through up cycles and down cycles.
Right.
So what we are saying is, we will invest a larger allocation into businesses which are doing well today also, and and on our outlook, those businesses will do much better in times to come also. So we want to participate in the growth journey of that company, rather than acting like from a mean reversion play or a contra play from that point of view. So that's why our style will be a much more pro growth in nature. We will have a much higher share of companies which are growing very fast. So again, in case I have to categorize, what we've said is, we'll have a 70-30 mix between pro-cyclical companies in our portfolio, pro-cyclical and counter-cyclical.
Okay.
Pro-cyclical, how you define it, is companies which are growing faster than the economy over the last 12 months. So again, in case a company is growing more than 10-11%, which means the current cycle is helping the company to grow at a faster rate. So we will have a larger share, around 70% share in these pro-cyclical companies. And counter-cyclical will only be 30% of the portfolio. So just to summarize, this portfolio will be much more pro-growth in nature. One is that aspect. Secondly, we discussed about company life cycle earlier. So our portfolio will not have companies which are matured. So as a result of that, a lot of mega caps which have kind of become matured in their company life cycle will not fit our mandate. So our portfolio will be much more younger in nature from that point of view, comprised of much high growth segments actually.
Okay. So from what I understand, we have divided all the companies or sectors into two parts: pro-cyclical and counter-cyclical.
Yes.
Pro-cyclical are those companies which are giving more returns in the GDP. So it is
growing their revenue faster than the GDP of the country.
Okay. So of course, I have read as a CFA student, as a CFA candidate, I have read that ultimately the markets will give you the return as much as GDP. Of course, that may be a theoretical norm. तो जितना हमारा GDP ग्रो हो रहा है कंट्री का, कहीं ना कहीं हमारी कंपनीज भी हमें वैसे ही रिटर्न्स देंगी ऑन एन एवरेज. Okay, so pro-cyclical are those companies जिनका revenue is growing faster than what the India's GDP is growing. Right?
Yes.
And counter-cyclical are those companies जिनका revenue at a slower pace grow हो रहा है. So like if GDP is growing by 10-11%, हमारी ये company का revenue maybe 8%, 9% या 7% पे grow हो रहा है. And the pro-cyclical ones are probably growing at maybe 13%, 14% and so on. And we are going to keep a combination of 70% of pro-cyclical and 30% of counter-cyclical. Am I right?
Yeah, you're correct, Zeel.
Okay. So I think this is the differentiating factor from the Invesco Contra Fund, है ना? Because Contra Fund is more of a value fund which will be investing in this counter-cyclical companies.
Yes. Contra Fund, we also have a Contra Fund.
Again, it's the most popular fund, sir. Everyone is investing in Invesco Contra Fund.
It's one of the main funds in its category.
Right.
So Invesco Contra Fund will have larger exposure towards counter-cyclical. So that fund is more value in orientation, more contra in orientation. And also in that fund, we don't look at company life cycle. So companies which might be matured also, we might have exposure in that portfolio. But here, those companies which are matured won't figure in a portfolio. So that is a basic difference between the two funds. This fund is a much more pro-growth in nature.
Okay. So, which sectors do you think, according to you, are pro growth? Now, I will give you some examples. Okay. Recently, we all saw that the GDP percentages have come down in the recent quarters. So, in order to boost the economy, we could see two actions taken from the government side. One was in the budget where they have reduced the tax slabs, or they have made up to 12 lakh rupees tax free. Of course, this is done so that people have some अवेलेबल फंड्स विद देम, ताकि उनके पास एक्स्ट्रा कैश रहे, सरप्लस रहे टू स्पेंड. सेकेंडली, विद इन फ्यू डेज आरबीआई की मीटिंग हुई थी, एमपीसी की मीटिंग, जहाँ पे उन्होंने रेपो रेट को भी कट किया था. नाउ रेपो रेट भी इसीलिए कट किया जाता है सो दैट लोग चीपर लोन्स अवेल कर सके. जो लोग सोचते कि भाई मैं एफडी में पैसा रख दूँ, वो सोचेगा कि यार अब मुझे कम रिटर्न मिल रहा है, छोड़ो एफडी बाद में करेंगे, कुछ खर्च कर लेते हैं, जो हमें खरीदना था वो खरीद लेते हैं. So we can see from these two actions of reducing the tax rate, reducing the interest rate, that government is trying to boost the economy. गवर्नमेंट चाहती है कि भाई तुम पैसा लो, अपने हाथ में सरप्लस रखो, इसे स्पेंड करो. तो ऐसी सिचुएशंस में कौन से सेक्टर्स है या कौन सी इंडस्ट्रीज है जिन्हें बूस्ट मिलता है? एंड इज आवर फंड टारगेटिंग दोज इंडस्ट्रीज एंड सेक्टर्स?
Sure, Zeel. Look, our portfolio will be a much more diversified portfolio. Okay. So what we are saying, portfolio will be constructed both from a top-down basis and bottoms-up basis.
Okay.
So when I say top-down basis, what we say is there are some themes which are very structural in nature. और जब हम थीम का बात करते हैं, which means those themes are doing well for a longer period of time. For example, if we say like premiumization as a theme,
Okay.
what does premiumization mean? Premiumization means that as and when a person has more money in their hand, they will probably buy better clothes. They will upgrade to a higher end car.
Right.
So they will
They
spend
may go
on
out for trips, tourism,
they will-
hotel industry.
hotel industry. But maybe premiumization would mean they will now next time go to a better hotel than what they have gone in the past.
Maybe buy a better phone than what they
Buy a
have
better
currently.
phone. So premiumization is something very rampant across sectors actually. So I mean,
Right.
like when you look at maybe a lot of consumer companies, like last quarter the biggest consumer companies showed a 0% volume growth. So one way you can say is that consumption is very weak, hence FMCG companies are not able to grow at a faster rate. But when you look at something else, you look at air traffic data. I mean, air traffic data grew at 13% for the month of December, and that was also because there were hardly any. There was short supply of planes actually. Had they not been there, the growth would have been further higher than 13%. So one hand, you're not seeing consumer staple companies show a faster growth, but on the other hand, you're seeing air traffic data grow at a faster rate because
So
air traffic.
non-discretionary चीजों पे लोग ज़्यादा
Non-discretionary and premiumization, because you're seeing people, lot of people move from rail to air, so that is an
Right.
example of premiumization. So that's why if you look at maybe iPhone sales in India, I mean iPhone sells what, I think 1.5 crore iPhone they sell in India.
Wow.
So on an average, in case each iPhone costs 50,000 rupees, which means 75,000 crore worth of iPhone sales happen in India. So by that yardstick, Apple is a much bigger company than a lot of these consumer companies actually. So that's why I think premiumization is a trend that is happening last 5-10 years, that will continue last 5-10 years. Again, to give you an example, if you look at SUVs, I mean SUV 5 years back, out of 100 cars which were sold in the market, hardly 25 were SUV. And today, out of 100 cars, 65 to 70 cars sold are SUV. So you can understand
I
SUV
can see lot of MG cars on the road.
Yeah, lot
Especially
of- lot
MG
of
के जो
brands.
EV आ गए हैं ना, they are so attractive that आजकल मुझे रोड पे हर जगह पे वही vehicles दिख रहे हैं. I don't know.
No, maybe because you want to buy a MG car, so maybe it will be
Maybe.
because of that. But a lot of SUVs. So this is an example of premiumization. I'm just giving an example that premiumization is a theme. So if you buy companies which benefit from that premiumization theme, I mean that company will continue to do well for a fairly long period of time. And when that
Right.
company continues to do well for a fairly long period of time, you will participate much more in the growth journey from that perspective. Hence your stock price compounding will also be high because the earning compounding is higher. That is one more theme. Again, like financialization is again a longer term theme. So when we talk of financialization, we know that last 4-5 years, a lot of demat accounts have got added. I think right now 17-18 crore total demat accounts are there in India.
So
I mean-
financialization means financial inclusion where more and more people are getting awareness.
Financialization is historically you've seen a lot of people invest much more in physical assets like
Right.
property, gold and all, but incrementally last 3-5 years, I mean, as and when you, for example, you're seeing the stock market do very well, people are realizing that longer term maybe equity market is also a way to make money. So you're seeing some bit of savings move from other financial physical saving to financial saving.
Right.
That's why like last 5 years a lot of demat accounts have got added, a lot of NSE active client base if you see, but that number is still very small. If you see today NSE active client base is hardly 5 crore, so that number could be a much, and in a country of 140 crore
Right.
people, that number could be very big number next 5 year, next 10 year, which means financialization is a longer term theme. So in case you buy companies which benefit out of that financialization theme, those companies will tend to do better. Like most of the capital market companies, they will tend to do better. The asset management companies, I mean, they will tend to do better. So that's why we are saying business cycle. In case you buy companies which benefit from this theme of financialization or premiumization or clean energy or make in India, I mean, those companies will grow at a faster rate, and then the stock price compounding will also be fast for those companies. So this is a top down approach as far as theme identification goes. Then there's a bottoms up identification of companies which benefit from that theme, and within this company bottoms up approach, we do the company life cycle of every company. So in case a company is matured, we exclude that company from a consideration. So that's how, I mean, the portfolio will get constructed both from a top down perspective and bottoms up perspective, and the intention is to create a high earning growth portfolio. Like the model portfolio what we have, the earning growth next 2 years is around 30% plus. So that tells you that it's a much higher earning growth portfolio what we are targeting versus what other portfolios are.
So your model, the model portfolio is based upon the historical figures, or is it the forecast, like the
No,
forecast of the
like
future
look,
expectations?
earning growth is always a forecast. So that
Right.
is our internal forecast for next 2 year. What will be the earning growth be for those companies?
Okay. Okay. So, what would be the ideal investment tenure for this? Now, I know that it is an equity oriented fund. We can never ever say. We always have to say any client that at least 4 years you should stay. Whenever it is an equity oriented fund, usually we advise कि सर अगर आप पैसा इसमें डाल रहे हो, invest कर रहे हो, so आप कम से कम 4 years इसे दीजिए to give you some decent returns. Is there any particular time frame for this category? Because ये मुझे सुनने में लग रहा है कि थोड़ा सा long term game है. ऐसा मुझे लग रहा है सर.
So you are correct. Look, equity, as you rightly said, 4 to 5 years should be the minimum time horizon.
Right.
And more so, last 2-3 years, 3-4 years has been very good. So investors who are coming in today, as we discussed early, last 6 months with the volatility, with the drawdown in portfolios, a lot of people are confused and anxious. So that's why equity is a longer term game. You need to have a minimum time horizon of 4 to 5 years for any category of funds, and specifically for this category of funds under business cycle. Look, again, this is a thematic category. This is a category, I will say, they are diversified funds actually. Diversified, like large and mid cap is a category, flexi cap is a category, multi cap is a category. Those are much more diversified category funds. There, most of the funds could have 50, 60, 70 names in their portfolio.
Right.
They are much more diversified across all sectors. But the business cycle fund, what we are creating, this will also be a diversified fund because we'll have 12, 13 themes around which we'll construct the portfolio. So there'll be 12, 13 themes, and more or less most sectors will get covered in those themes. So it's a diversified fund, but the number of names will be slightly lesser. So the number of names in the portfolio could be 35 to 40 in the portfolio versus maybe 50, 60, 70, which is there in a typical diversified fund. So what I will say, this is a diversified fund across themes, but it's a much more compact portfolio of 35-40 names. And also this is a slightly a high earning growth portfolio. This is a portfolio which is trying to play different themes in the market. So in case I have to give an analogy of a cricket match, maybe this is like a 2020 team which has been created out of a ODI team. So the
Okay.
players over here are slightly more attacking in nature. So the intention is the intention is the return should be higher than a diversified fund, but at the same time the risk in the shorter term as far as volatility goes could be also slightly higher than a
Right.
diversified fund. But again, I mean, if we look at the thematic category, this is a fund which
Right.
is in the thematic category.
Thematic category.
So a lot of sectoral funds are there in the thematic category. But what happens, a sectoral fund, when that sector fund is launched, that sector looks attractive at that juncture. But maybe 2 quarter, 4 quarter down the line, something has changed. That sector does not look as attractive. But that sectoral fund manager won't be moved away from that sector. So typically a sectoral fund returns tends to be lumpy. I mean, 2 years returns could be good when that sector is doing good, but there could be a time after that when sector is not doing very well. So 2 years it could be returns could not be good. So performance will be lumpy in a sector fund, and no investor likes lumpiness in the performance. They want linear returns. So because this is a fund, business cycle is a diversified category, we will tend to have the best themes which is there from across different sectoral funds. Like for example, in a digitization fund, in case quick commerce is the key growth area, we'll have quick commerce over here. In case a healthcare fund has hospitals as the key growth area, we'll have hospitals over here. In case in a financial fund, financialization stocks will be the key area, we'll have it here. So this fund will have the best of most of the sector funds, best
Sectors
things out
and
of
subsectors also, I think,
subsectors
right?
within this.
Sectors, subsectors.
So that's why the return the risk profile or the volatility profile should be much lesser than a sectoral fund from
Another
that point.
sectoral fund.
So this
Okay.
is how I will compare this fund versus a diversified fund and versus any other sector fund.
Okay, very well. So, what I could pick out from all the conversation was that first, our research is very strong. We are picking up both top down and bottoms up approach. From the top down, we are looking up at the sectors which are supposed to grow because of whatever or however our economy is moving. For example, you said premiumization, where people are spending on better products. Second, you said about financialization, where people are moving towards moving their money from real assets to financial assets, which will lead to growth of all these probably demat account companies or trading companies, or even is NBFC also part of this?
NBFC is not part of that. Financial NBFC will also be a part of it, but the bigger beneficiary of financialization will be capital marketplace,
Okay.
exchanges, depositories,
Okay,
brokers, AMCs, those kind of companies.
Okay. So yeah, so that is going to be our top-down approach, where we are also diverting a sector into subsectors also, right? We are distinguishing them, and then we are picking out from bottoms up. We are picking out the best ones in that particular subsector also. Okay, very well. So the first distinguishing factor is the research. The second important factor which I enjoyed about this was, see, you don't create wealth when you are overly diversified. I have read this again and again. You create wealth when you have a concentrated portfolio, when you pick out the top gems and you stay invested in them, even when they are down, even when they are up. So first distinguishing factor was the research, and the second is having a concentrated thematic portfolio. While others in the similar fund category are having probably more number of stocks in their portfolio, we are going to stick by the best 35 or 40 stocks, and we are going to play along with them, grow along with them.
Yes.
Right.
Also over there, one other risk management tool which we've introduced is we will not have more than 5% allocation to any stock in the portfolio. Because
Okay.
as I said earlier, this is a thematic fund. So there's always a chance one may go wrong in any theme selection, or any company within that theme might not be working the way one intends to. So that's why we are trying to cap allocation to any stock as maximum 5%. So that will make sure that in case that company does not work, it doesn't ultimately impact the portfolio in a big way.
Okay, but what if that company is doing very, very well, and that is why it is crossing the 5% threshold? Will you
Yes,
still exit it?
no, so not exit. What we are saying is we'll cap it at 5%.
Okay.
So ultimately, look, any portfolio return has to be much more granular. I mean, when you have 35 stocks in the portfolio, I don't want 3 or 4 stocks to do bulk of the batting. I want all my stocks to contribute in an equal way, because in
Right.
case 3 or 4 stocks only contribute the most, I mean, every year that challenge will be there. So just like you've gone right with 3 or 4 stocks, you can go wrong with those 3 or 4 stocks next year. So from
Right.
that perspective, any portfolio which is much more granular in performance, so we keep on, I mean, attribution is something we look at very actively as to what is the attribution different stocks have had in the portfolio. That's why with that mindset, from a risk management point of view, we've capped holding at any stock at 5%, and in case they cross 5%, we'll bring it within that 5% threshold.
Okay. Okay. Thank you. I just had one more question. See, any company is divided into 4 stages. I think you have already answered, but I want to go a little deeper into it if
Sure.
you are okay. You have already explained that there are 4 stages of any company's life cycle. First is when it is in a starting phase. Second, when it is in a growth phase. Third, when it is matured, it has got a decent amount of market cap. It is matured, and slowly it starts declining when the new competition comes in or any regulation comes in, and then again the cycle starts. Startup, growth, mature, and all. आपने कहा कि आपका फोकस ग्रोथ कंपनीज पे रहने वाला है. अब हम ये आइडेंटिफाई कैसे करेंगे कि यार ये कंपनी उस ग्रोथ फेज में है? आर देयर एनी की इंडिकेटर्स जो आप हमारे साथ शेयर करना चाहोगे?
Look, typically when we talk of growth, it starts off with what is the revenue growth of that company. So that is the biggest way to understand whether that company is a growth company or not a growth company. But then you need to look at profitability metrics also, because I mean, you don't want companies to keep on growing at a very fast pace, burning money also. So I mean, in this
Right.
method to madness, growth should make some sense and ultimately create value for shareholders. So in case you have to look at whether it's a growth company or a matured company, firstly you have to look at whether how fast is the growth. And here the proxy we take is we compare it to the GDP of the country. So in case
Okay.
India is growing at 10%, so in case a company last 5 years has grown at 20% plus, 25% plus, which means they are growth companies. In case a company has grown at 5%, it's a matured company. And it is always possible that in the same sector also, two companies behave differently. What
Right.
I was seeing, like maybe a sector like two-wheeler, yeah, I was seeing last 10-year data. The largest company in the two-wheeler space has grown at 4% CAGR last 10 years. But one of the younger companies within that sector has grown at a 17% CAGR last 10 years.
Okay.
So it
Right.
goes to show that even though within the same subsector also, two companies might behave differently as
Right.
far as company life cycle go, because ultimately whether a company stays growth oriented or not depends on the top management. In case the promote management is very growth focused, they will continue to grow at a faster rate.
Right.
But somehow at some point in time, in case they become satisfied, they become complacent, you will see that company will not grow at a faster rate. Then it will enter into matured stage in its life cycle. That's why, I mean, in hindsight, it is very easy to say what is a matured company and what is a not matured company. But then you need to
Right.
keep meeting the management, what is their thought process, understanding how are they looking at longer term growth, and then come to a conclusion that company belongs where in the company life cycle journey.
Okay. Okay. And do you have any fixed period for shuffling the portfolio? Is it something like every 6 months, every 1 year we will reshuffle? Do you have any time frame?
Look, this is again a fund which will manage like just any other active fund. So
Right.
normally, just like any other active funds, needs to continuously evaluate stocks in the portfolio, look for relative attractiveness. It will continue to do that. But besides that, what we've said is there will be a 70-30 allocation between
Right.
pro-cyclical
Pro
and
and counter.
counter-cyclical. So maybe at the end of every quarter, when the results have come out, we will see that whether they are companies which have moved from one bucket to the other, and ultimately what is the share. So if it becomes 65-35 at the end of the quarterly results, then maybe we'll rebalance it in by making it
Right.
70-30. So because we want this portfolio to remain a pro growth portfolio, we don't want this portfolio
Okay.
to become like a value, like a contra strategy
Right.
at a later point. We want the companies to grow at a faster rate than the economy, and hence having a 70% allocation towards pro cyclical and a 30% allocation towards counter cyclical is what we will do every quarter.
Okay. Okay, Mr. Aditya, this was helpful. Okay, so now moving away from this part, okay, I have been reading a lot about the gift city funds. Okay, so the government is encouraging gift city. People, NRIs, foreign nationals are very interested to know what is there in gift city. So, is Invesco doing something on this? Is Invesco coming up with any mutual fund or anything to promote this gift city or to encourage more foreign nationals and NRIs to invest with us? Is there any
Look,
scope
a
for
lot of
it?
other mutual funds have taken that path in terms of opening the offices in Gift City, but we as a house, Invesco, has not taken any decision on this. So far
Okay,
we have not gone there. But I mean, as you rightly said, looking at the government dream in terms of how big Gift City can become, but most mutual funds at some point in time will open shops
right,
at some point in time there.
right.
But
Okay.
nothing on the immediate horizon, what I can share.
Okay, okay. Mr. Aditya, now I have some personal questions related to you. I'm very sure that there would be many upcoming CFAs, many CAs who would be watching this podcast. उन सबको ये जानना होगा कि यार अगर हमें वेल्थ मैनेजर बनना हो हमें पोर्टफोलियो मैनेजर बनना हो हाउ कैन वी बिकम दैट कैन यू शेयर समथिंग अबाउट योर जर्नी एज टू हाउ यू रीच्ड हियर एज अ फंड मैनेजर
No, look, I think again, equity is something. In equity, I was sharing with some of your colleagues earlier that you need to have a lot of passion in the equity market because equity is such. As we discussed in the past, there are a lot of cycles, economic cycles are there, market cycles are there. So, in case you don't have a passion for the markets, equity markets, somehow in those bad time, you will lose interest in the market. So, that way, I think firstly, it has to come naturally as far as passion for the market goes. So from that perspective, I think maybe I mean a lot of CAs and CFAs could read business newspaper because
Right.
as and when they read newspapers like ET and Business Standard on a continuous basis, they will start relating with what economy means. They will start relating with what are stock prices, what does company does. I think so. That is the first. I mean, first way they can get used to it. Then
Right.
obviously due to I mean liking, they can move into stock market at some point in time. But again, stock market is something you have to think it's a very long journey. I mean, like wealth management has become a very attractive proposition
Right,
actually. I
right. In
mean, you
fact,
see.
many college students, they just come to us, ki, I want to become a wealth manager. How can I become that? It has become a fancy term. In fact, even CFA has been, people are getting very attracted to that term. Ki, yaar, I want to become this. How do I do this?
No, CFA is again a wonderful course. I myself has
Right,
done CFA, so the course material is fantastic over there.
right, right,
So only thing is that CFA as a course, I mean, it opens up to that idea this exists, but then you need to practice those ideas. So I think then probably they need to get into a wealth management outfit and all those things, AMCs, and maybe practice those concepts over time. And what I can say is that ultimately it is you have to learn the hard way, you have to do it on the job. I mean, theory is one part of it, practical is one part of it. So maybe like I mean there are great investors in India, like when you listen to Mr. Ramdev Agarwal's
right.
conversation on YouTube. So today, because of social media, you have access to most of these great investors, what they've spoken. You can listen to Ramesh Damani. So there are so many investors. So I think today self-learning is a much more, I mean, easier job from that perspective. So they can keep listening to interviews of all these great investors. And I mean, with every interview, in case one can learn one aspect also, I think over time one will end up becoming a much better investor and much better wealth manager.
Thank you, Mr. Aditya, for explaining all these things. I'm sure our viewers would have taken a lot of inspiration as well from this, and I really appreciate this key. Instead of just relying on bookish knowledge, we should keep updating ourselves. We should watch more videos. We should read more business books. And जितना हमें finance से real में प्यार होगा, जितना हमें equity से real में प्यार होगा, only that will help us in becoming a good wealth manager or fund manager. And moreover, I think the intent also, the intent to help people, the intent to grow someone's money, I think both of these will help us become a good fund manager, I guess. Okay. So it was great having you here. Thank you so much for your time. And my dear audience, I hope you enjoyed watching this podcast. Keep following us for more such amazing podcasts with us.